Good afternoon and welcome to Santander Asset Management's latest podcast. I'm joined again by Stefano Amato from Santander Asset Management. Good afternoon, Stefano.
Hi, Simon. Good afternoon.
Stefano, the key question for today's podcast, the Federal Reserve took an aggressive stance last week with a 75 basis point increase in the base rate in the United States, swiftly followed by the Bank of England with the fifth consecutive rise in interest rates. Is this central banks sticking to the task of tackling inflation no matter what?
It's a great question, Simon. I think it's very central to what market participants are focusing on. I would say that, at least for the time being, the answer is yes. Certainly from the Fed. I think the ECB has a slightly softer stance, and the Bank of England perhaps an even softer stance still. But from the Fed, I would say the short answer is definitely yes. I think that the more important moment, the key moment from last week, was when the Fed said, I think I'm quoting here, we have to restore price stability. It's the bedrock of the economy, and without it, it will not work for people. So they're telling us, right, that they will do this. They might be behind the curve. They are trying to get ahead of the curve, but they're promising us, that they will do whatever it takes to get things under control. So if you think about it, if what Mario Draghi said 10 years ago, right, when he said whatever it takes, was the beginning of the era where the central bank had your back, almost exactly a decade later, this is, the reverse of that, right, which is, we will fix inflation no matter what it takes.
Thanks, Stefano. We've already started to see in some of the economic data that economies in various parts of the world are starting to slow already because of rising prices. In the event that slowdown accelerates to the extent that certain parts of the world, perhaps even the UK, go into recession, do you see that the central banks effectively next year may be able to press the pause button?
I mean, everything is possible, right? But I think the bar is quite high for a number of reasons. First, recessions are, nobody likes them, but they are a recurring phenomenon, right? It's always a matter of when, not if. That's the way that the economy works. So at some point, we all know we're going to get a recession. While losing control of inflation is something that only happened in recent history in developed countries, maybe twice. Once in the 1970s, and then there was a lot of pain on the back of it, not just economic pain, but also societal pain. And famously, when it comes to the ECB and especially the mindset of the German voting members at the ECB, famously in the Weimar Republic, right, which was one of the leading causes for the rise of the Nazi regime there. So I think the bar is very high. Of course, there is a point where if we get enough, quote unquote, pain in the economy and in markets, but more in the economy, I will say, they might pause or slow down. But I think that bar is quite high. Now, there is, a possibility. We don't think it is the central scenario, but there is a possibility that the actions that central banks are taking, will slow down the economy, but not too much. And inflation might come down, perhaps not to target or below target. So a year from now, we might be in a place where we have, anemic growth, but not negative, so not a recession. We might have inflation, which is not below target. It is, a little bit above. And that, given the set of starting conditions today, is what they are calling a softish landing. So I think it is very much, path dependent. We need to see what transpires over the next few months. Nothing is written in stone yet in terms of what is going to happen. But clearly, the actions that we've taken in portfolios are to prepare for a potentially volatile period.
Thank you, Stefano. That leads me on to, given the market backdrop and the decisions by the central banks, how have you positioned client portfolios given the market conditions now and what you expect in the near future?
Yes, absolutely. So we are positioned underweight equities and underweight bonds, and therefore overweight cash. We have had similar positioning since the beginning of the year, with a couple exceptions here and there where tactically we reduced that underweight temporarily. But we've maintained a defensive position for the whole of 2022. The positioning betrays our view, right? So we do think the markets still look quite fragile, especially in light of not so much just the action that central banks have taken over the last week or so, but also the lead up to those, right? So again, taking the Fed, which is most likely the most important one here, right? As of Thursday, the expectation was very much of a 50 basis points rate hike. Then we had an inflation print, which was definitely not showing any signs of peaking on Friday. Then there was a leak through an article in the Wall Street Journal where they opened the door to 75 basis points on Monday, and then they did so on Wednesday, right? So in an environment where the most powerful central bank in the world has told you in no unclear terms, we are going to raise rates by 50 basis points in June, and then in 3 days they have to scramble and change that and leak new guidance and say we're doing 75, I think is telling of how much less weight investors give to that forward guidance. And also it's telling of the fact that, to be honest, inflation is a fiendishly difficult thing to forecast, even for the central bank. And therefore, markets remain fragile. What we saw after the 75 basis points hike, right, was a quick rally that fizzled out quite quickly. So that, I think, is the environment we're in, and therefore we want to be positioned conservatively.
Fantastic. Thank you, Stefano, for your insights as usual. The views and opinions that you've heard on the podcast today are the views and opinions of Santander Asset Management UK and do not constitute investment or personal financial advice. If you want to explore more of our views and insights, please visit our website at santanderassetmanagement.co.uk. If you do require advice or guidance, we would recommend you contact your professional financial advisor. Thanks again for tuning into our latest podcast. We look forward to speaking to you again soon.